The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 19th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day, each and every second of each and every day. So let's begin our day with empowering beliefs. You know what I like to call the 7 great laws of life. We've all heard of the 7 wonders of the world, those being the Great Pyramid of Giza, the Hanging Gardens of Babylon, the Temple of Artemis, the statue of Zeus at Olympia, the Mausoleum of Maslow, the Lighthouse of Alexandria, and, of course, my favorite, the Colossus of Rhodes. You know, there are always also, well, actually, there's also what I believe to be not just the 7 great wonders of the world, but the 7 great laws of life. And those laws are, number 1, the more one works and plants, the more one can harvest. The more good one can do, the more success one can achieve. Much in life, well, much in life depends upon our view, and only we can control our view. Think about that. Number 4, one stone overturned can become a stepping stone to our next discovery. Number 5, whatever we choose to focus on, good or bad, our mind will expand it. Number 6, things will happen around you. Things will happen to you, but the things that really matter are the things that happen within you. And finally, number 7, choose to do what you can, where you are, and with what you have. Yes, folks, always be present, and thank you so much for being present here with us today. The truth is, there are more than 7 wonders of the world, because I didn't mention the Great Wall of China, Petra, the Colosseum in Rome, Machu Picchu, and of course, there are more than 7 laws of life. But these 7, they'll keep you on the path to success. Let's go check out, see if we can find 7 wonders of these markets out here right now. We've got the Dow up 15 points. I guess that's a wonder in the market. It's trading out at 16,351. S&P is flat. It's up 1 point. Trading at 1873. NASDAQ is flat. It's off 50 cents. Trading at 43.32. Russell 2000, the biggest leader in the clubhouse to the downside, off 2 points. Trading out at 1202. NASDAQ 100 up 70 cents out here. New York Stock Exchange off $2. A flat market. I would expect that we will see a flat market, flat-ish type market going into the 2 o'clock Janet Yellen release of the Fed note. She's going to be out speaking. It's her first time out on the stump out. Well, it's kind of her first time out here. They're treating it like it's her first time, but let's face it, she's been in front of camera. She's been asking questions for a long time out here. So let's go check out the markets. The first chart we're going to look at here is the Euro-Japanese yen. You know, if somebody were to ask me to find the most bearish chart that I could find out here, well, and I'm not going to say that this is bearish here. I'm going to say it's the one that is suggesting to be the most cautious. And why do I say that? Well, I say that because this currency pair, this is the carry trade. This is the currency pair that correlates directly to the U.S. stock market. When it doesn't correlate, the times that it doesn't correlate are actually very cool times, because what it does, it's going to tell you which way the market is going to resolve itself. And so when the Euro-Japanese yen is trading down and the markets are trading up, that tells you that eventually what's going to happen is the markets are going to trade down. They're going to go ahead and catch up to the currency pair. Now, we can't say that that is really the case here. All that I can say is that the bounce off of the bottom has been relatively dismal out here. And this is the 120-minute chart that we're looking at on my screen right now. If I switch over and take a look at the daily chart out here. Daily chart shows that wonderful set of Gartley buy and sell patterns out here. The one that's in effect right now is the Gartley sell pattern. This is truly the one to be keeping an eye on with regard to what the market's next move is going to be. First, if, in fact, the euro-Japanese yen can take out the support level, which was set at that breakout session from March the 6th, the low there is 140.41. What it will be communicating to at least me is that this Gartley sell pattern is likely going to turn into an A to B equals CD down. And if that's the case, then we'll see all these other very bullish signs that are out in the market, all these breakouts reverse. But I don't know that that's going to happen. In fact, right now, the signs are pointing to the fact that it is not going to happen. And instead, what could occur is we'll see, and here's where the real message comes. So we know where it's going to come to the downside and what to be looking for. That's if you track this currency pair, which I do. I do on behalf of us and certainly for myself and all of our subscribers out there to really keep a track, how about that? Really keep track of what's going on. What we also have here is because this pattern has worked. What I mean work is that any Gartley buy or sell pattern has always got 5 different outcomes to it, and this here has reached the first outcome, which was the dead cat bounce of 0.382 retracement level. So this thing in essence has worked. It's accomplished what it needed to do. If the 143.76 gets taken out, I can tell you in no uncertain terms, do not be short this market. I'm not sure that you should be shorted right now, but I can say at this stage, if that 143.76, and that'd be quite a move. I don't expect that we'll see that today, but if we did, if that high gets taken, then why do I say that? Because at this stage here, more times than not, a failed Gartley sell pattern or Gartley buy pattern. In this case here, it's a Gartley sell pattern, a 0.786 Gartley sell pattern. When it fails, it turns into a butterfly, and that'll be a huge expansion on the way up in this currency pair, and should then mean a huge expansion inside of our markets as well. So I do believe that the lows that we saw that were put in on Sunday, that is a serious bottom, that is a serious initiation move to the upside in the marketplace out here. And that is the way that I'm looking at the markets until I see further evidence of the otherwise out here. So it's really this currency pair is the only, it's the last piece of information out here. If we take a look at the VIX index, though, it says liquidity is plenty abound out here. It's trading at its session lows. It's trading at 1440 as we speak right now. Now, it's not that far away from the 50-day exponential moving average, which is 1485 out there. You're trading at 1440. If it gets back above that could change the game. That get the sphincter muscle of the liquidity in the market to tighten up, and when that tightens up, the markets typically move lower. But right now, it's in a bullish formation out here, just like the indexes. You know, if we put up the Rhodes momentum indicator here, let's start off the day by taking a look at that with regard to the S&P 500. We got a nice. Let me put the crosshairs up there. It makes it a little bit easier for you and me. We got a nice little buy signal that took place on March 17th. Was that or Wednesday, so that was Monday out there. You got a confirmation here yesterday. Right now, and it's in bullish mode. It's been in, you just got that. What's the next buy signal? If you're watching us on Tiger TV, these green little signals here, those are typically the signals that you want to be buying from, because that's what I call the lower threshold limit of the Rhodes momentum indicator signals out here, much like a rubber band, because the market is nothing more than really a rubber band going in both directions, and it really just depends on the time frame. It is that you are trading on here, and so the gift is, if you're not in the market, the gift is, hey, I want to see the market push lower and create one of those lower threshold Rhodes momentum indicators. What you don't want to see is those things coming back to back to back, because that tells you that sellers are in control. So you want to see one of those things form, and then you want to see, there's a couple of different trading rules. I'm not going to give you each of those trading rules right here, right now, but we did get a little buy mode, which was confirmed here yesterday, and that says that price now wants to move higher out there. You'll see these red signals, those red signals out here. They are the ones that tell you that the buyers are in complete control of the market. And that's what we saw coming off of the lows back in February 5th out there. Nothing but red signals all the way up. So this was a buying opportunity that is present. You can actually see this thing now starting to begin to form its little V shape out here. And that's in the S&P 500. So where does that take us to? I don't know where it takes us to in the S&P 500. What I do know is the longer-term prediction for the S&P 500 is 2350. So you're only at 1873 as we speak right now. That's what's going on the daily chart. The weekly chart has a little bit of work to do. It's got a price relative strength divergent pattern that was confirmed last week, but it does not have that second opinion. It does not have that follow-through this week. And if you don't, I suggested, I got a couple folks that send me emails, because yesterday during one of the shows, I said, hey, perhaps the most important trading secret out there is to get a second opinion. And I said, I just simply applied it to life. Let's say you're going to get, you check on your health. I've done that here recently. I went and got a total tune-up. Maybe I'll talk about that at some point in time, but I did some of the newest, highest tech test out here to go check out the Rhodes plumbing system, and came away with all thumbs up. So that felt pretty good. In any event, but you go get a second opinion, right? Somebody tells you there's something wrong out there. You want to make sure that, in my opinion, you want to, how about that? I'm using the word opinion, maybe a little too often here, but in my opinion, you want to get a second opinion. Well, I think when you put your money to work, you want to get a second opinion. That could be, two different newsletter subscribers. I'm really referring to chart patterns that you trade out here, and that is that when you're going to go long, because your pattern is hit, I say you wait one more bar and confirm that price is actually going in that direction. Yes, you might pay a little bit higher price out there, but I said go back and check out all your trades, see if you would use that system. And I got emails from 3 different folks that apparently were pretty diligent, they were very diligent about keeping track of all of their trades out there. And they went back and in 2 of the 3 cases, it was like the email came back with just wide eyes. Like, why hadn't I seen that before out there? So I don't know what their trading strategies were or are, what have you. That wasn't really shared. But just simply, you like to get a second opinion. And in trading this strategy here, where you see that price relative strength, or any trading strategy, this is a weekly chart we're looking at. Hey, look, the week's not over. We're only 2 days into it. If we were to see a lower close this week, that would be something serious, because this is a significant top that has, or this is a significant topping pattern that has formed. Whether it gets executed on or not, well, certainly you get a close above last week's high, and that pattern goes away. In fact, the way that I take a look at the candle formation, if you get a close above 1850, well, let me see what the exact number is. It would be 1857.68. This is the S&P cash that we're looking at. So 1857.68. A close above that, and you're trading at 1873. That bear sash basically starts to go away and is not as significant in my book out here. That's on the weekly chart. Let's go back to the daily. Let's look at the semiconductor index out here. Let's go take a look at the SOX. Let's see what it is doing, what it's trading at. Right now, you've got the SOX trading out at 580.13. It's trading above its resistance level. Yeah, you can see the line on my chart shows that it's moving higher on less relative strength. But until you get the reversal signal out here, it's just kind of like a warning indicator. It's like the light that comes on your car that tells you that you're low on fuel. That's really all that this is. This is my low on fuel indicator. Hey, thanks for helping me out there. That's a new way for me to correlate it, to link the known to the unknown. So Stevie's got your fuel indicator is running low. That doesn't mean you pull over right then and there into a gas station, right? Now, what the market does is the market can refuel itself. And if it starts to move higher and that relative strength indicator keeps moving up, that is bullish. Well, look, the semiconductor index, if this market's going to go south, this index here cannot be going north. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Really quiet market out here. Dow's up 17, S&P's up 50 cents. Composite is off 7 points out there. And before we went to break, we were taking a look at the SOX index. This is the daily chart for the SOX index, and our man Al in the control room. Boy, great correlations that he gave to me. So, I was talking about the low fuel light that comes on in your car out there, and that's really the equivalent of the price relative strength divergent pattern. That's not confirmed, meaning price is going up, but you don't have a reversal candle. When you do have the reversal candle, that is the equivalent of that check engine light coming on. When that check engine light comes on, that does say, hey, you need to pull over. You need to go ahead back to have that serviced out there. We did see that take place here inside of the SOX index. That was as it formed this large, this is a daily chart we're looking at, this large bearish engulfing candle on March the 13th. But notice how even on its push lower here, this is how strong the SOX index is. On its push lower, remember we were looking at the S&P 500, and it had formed a lower threshold, one of those green little Rhodes momentum indicator signal candles. The sellers were not even able to push the price low enough in order for that to flash onto our screen out here. So you've got the SOX today up and over our resistance, which should become new support. That's assuming that it can close above the high of that trading session from March 13th. That high is 577.97 out there. So it's got the low on fuel light out there, but that alone is not bearish, because if you drive a car that can go a lot, maybe this is a Prius, so it can go a long way on some low fuel out there. In fact, let's switch over to the weekly chart. What does the weekly chart here show us for the SOX? Just out of curiosity, the weekly chart shows no bearishness. The last time we saw any kind of a bearish reversal sign was in January 24th, 2014. That says that support really ought to be the high of that session, which is 547.92 out there. Another bullish candle here forming as we speak right now this week. That is on the SOX. Just out of curiosity, what's the monthly chart here show for the SOX out here? And, that shows that the last time that there was any bearishness around, it really wasn't, that was August of 2013 out here. And, of course, the very following month in September, that was erased immediately. So the SOX here has been very, very strong ever since the hammer candle that formed all the way back here in July of, when is that, July 2012. July 2012. Look at that. Forms a nice weekly hammer candle, July 2012, and in essence it has been off to the races ever since that. That is on the longer-term monthly chart. Let's go take a look at the, what do we want to look at next, folks? Let's go look at the Russell 2000. Let's go see what it is doing out here. So the Russell 2000, it confirmed a buy, went into a little buy mode here yesterday. With its move higher, taking on one of those lower threshold signals. That was a buy signal that took place after we saw it close above the high from March 13th, which was 11.95 out there. We know we've got a confirmed A to B equals CD. That took place on this little wide price spread area here from March the 4th. So this has got a large A to B equals CD to the upside that is forming, and nothing bearish that we can see here other than trying to hit the swing point that it left on that big upthrusting day on March the 4th out there. But that's really the only overhead resistance that exists out there for the Russell 2000 on its daily chart. On a weekly chart out here, so we'll see what kind of pattern it is that we've got setting up here. And this also showed that the low fuel light was coming on here recently. I'm referring to 2 weeks ago, March the 7th, as we see that it still was making a higher high on less fuel, less relative strength out there. But no, the check engine light did not come on. Check engine light did not come on because we did not get any kind of reversal candle out here. And so the weekly chart is still looking very bullish inside of the Russell 2000. The weekly chart out here, or monthly chart, I should say. Let's see what the monthly chart here shows. Yeah, monthly chart shows that, the last bearish candle that had set up was the month of January, and that was taken out last month. So this is showing, look at this. This is a monthly chart. This shows you, look at just nothing more than red Rhodes momentum RMI signals out here, including this month. And this month is telling you that it's the buyers that are in control of the market as we speak. And that's as of March the 19th at 10:29 a.m. Here's the deal with regard to the markets. None of us really know what's going to happen next. What we do know is the wind is going to blow. So it's our responsibility to just simply, as the market provides us with more information, if we need to change our, if the market is telling us to change our opinion about what it's doing out there, that's when we go ahead and take action. Each of us can plant the sails. Here's the deal. Circumstances happen to each of us. The wind is going to blow. When the wind blows in a different direction, it just is testing us to see if we're ready to take the next move and believe what the wind is telling us. Right now, the wind is blowing north. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 13, S&P up 61 cents out here. Goldilocks and silver. Let's go check in on those. Then we can go back and take a look at the some other indexes, ETF, stocks, or what have you. So we're taking a look at the daily chart here for gold. Now, what you can see on the, and we're still utilizing the Rhodes Momentum trading indicators out here. If you take a look at the low that was being formed here on December 31st, you can see that you had price pushing down, making a lower low, but doing it on less relative strength, meaning that the RSI line was moving higher, meaning that the selling wasn't I don't know how to best term it. It wasn't, I mean, selling is real, right? But it was just simply telling us that it did not have the energy. You know, that's where, in this case here, it's kind of like the reverse. It was high on fuel, like he got too much fuel. I'll have to come up with a correlation for that. I don't want to spend time doing that. Let's just take a look at the pattern that was setting up. So you got price pushing lower on less relative strength out there. And then on the Rhodes Momentum Indicator signals, I've got this little green signal here that formed, indicated that was in a downtrend. The market was in a downtrend. That's the rubber band that is stretching. And you got a buy signal on this that actually took place on January 2nd. Now, I had suspected as it was pushing lower here, so my clients and I, we started taking positions inside some of the gold equities, mining equities, back on December 31st while everybody was out at the party early. On January 2nd, we got that nice little confirmation out here with a move higher. That's when the chart, if you're watching my screen, it turns to a kind of a purplish type color out here. Now, what we have seen here as Goldilocks has made its high, it made its high 2 days, two trading sets ago on Monday. Now, that candle signal is a reversal signal. That's what's called the key reversal session out here. And that's when the market is extended, which it most certainly was. It was extended either by A to B equals CD formats, by being by the relative strength indicator being up there. In this case here, so it was extended, meets condition number 1. Number 2, not necessarily in this order. You need a trading day that exceeds the high and low of the prior session. It did that. And then number 3, you just simply need a close in the opposite direction of the trend that it was coming in. In this case here, the trend was moving up. That means you need to see a red-bodied candle. Well, we got that. And then you got the follow-through yesterday, and now you're getting even more follow-through. Now, the important thing here is we're now just finally starting to see a point where sellers have control. When sellers have control, that's when it forms this little green indicator, this little Rhodes momentum indicator signal out here. So this is giving us what appears to be, even though it's turned to red to selling, that's what it's supposed to do. It doesn't mean it's going to end right here. This could go on for several days and push lower and then finally form this. That little candle that's being formed, that signal that's being formed, will continue to move from one candle to the next after each trading session as appropriate out here. But right now, this is telling us, okay, this was telling us about a high that was out there and that the market should pull back. We're seeing it do what it's supposed to do. And after it forms that next, when it finally forms that next Rhodes momentum indicator signal, it will be very easy for us to identify, okay, when has the momentum changed back up to a bullish standpoint here. So this is a system that's not intended to try to buy the bottom tick or sell the top tick. This is a system that is just simply intended to be able to get you on board a trend and in an early stage of when a trend is changing, when that rubber band has snapped out there. So that's what's going on in Goldilocksville. That's on the daily chart. If we take a look at the weekly chart out here, now I'll go back to the daily chart too. But I'll do that in a moment. You can take a look at the weekly chart. It, too, was forming a price relative strength divergent pattern out there. But you can see on a weekly chart, take a look, red RMI signal, February 21st, red RMI signal last week as well. So you got a bearish engulfing candle forming, but 1307 looks like that might be a target area for where price might fall back into. In fact, if we go back and we take a look at Goldilocks out here, I'll use the different charting system here. I'll use the Ensign Windows charting system out here at the 1311 area. So that at 1307 has been some pretty good support. 1311 is your 0.382 retracement and also is likely the bottom of this rising price channel. So we'll see. That's going to be its second test. The first test is going to be the 50-day exponential moving, the 200-day exponential moving average. That's at a price level of 1333 out here. But I would suspect it's going to come back and it's going to test that area. It's going to turn people into non-believers. But what we know, going back and taking a look at the momentum signals out here, what you're always looking for is you want to see when you're trying to buy, right? You want to try to buy in essence, at the lows. Now, I'm not trying to buy the bottom tick here with this system, but you want to see a market. I'll go back to the daily chart out here. You want to see the market give you one of those lower threshold candle signals out here. Take a look at coming off of the bottom out here back from January 31st. Nothing on the daily chart but red Rhodes momentum indicator signals telling you that, and this is that what this system is doing, it's really identifying the heartbeat of the market. It's telling you what buyers and sellers are doing. It does not consider. It has nothing to do with the volume. The volume aspect of it doesn't matter what's going. It's really what's going on with regard to price inside the. It's the electrocardiogram or the echocardiogram or whatever it might be of the stock market out here. So you're always looking for that next push lower. You want to see the bears push lower, the sellers push lower to give you an opportunity to be able to get in. This is not even a signal dependent. Look, if you were in this if you were in the gold trade coming back here to the early January time frame, and your horizon was a longer-term trade, this isn't really a reason to sell. You're looking for reasons to be able to add to a position out here inside of Goldilocks. Now let's go take a look at silver, see what it signals. Now silver's not as pretty of a looking chart as gold because it just simply hasn't been as strong as gold, but it too also forming a lower threshold signal out here. We can see that silver had been consolidating sideways out here. Silver should come back into the $20, and what's going to hit that pretty quick. Right now it's trading out at $20.59, so silver is going to be interesting to be paying attention at as taking a look at silver. Let's go take a look at the silver chart here because it's that consolidation pattern. Let's extend that forward a bit out here. So I'm going to take this little red box. Well, number one, you can see here that what silver is doing is now all the way back to this little Gartley buy pattern. So it's made the 1.618 of this expansion, although that's really going away. I'm going to get rid of that pattern out here. We're going to say that's pretty much irrelevant. I'm going to get rid of the move, the measured move out here, and all we're going to do is we're going to just try to expand this box. I'm going to do this by tightening up the chart out here. Let me see if I can pull it forward. No, I don't want to do that. See if I can do that once more time here. Come on. Come on, baby. Oh, my goodness. I have not had this kind of trouble before. Oh, I can't believe it. Let me try to move it. The heck with it. Let me just move the box. There we go. Okay, I'll just move the box this way. So there's the consolidation area. Now I might be able to move it side. There we go. Now I can expand it up. So here's that consolidation pattern. Of course, we saw silver break out of it. So now we're going to see whether or not the consolidation pattern is going to be strong enough to act as support. Now, why should it act as support out there if this is a real bullish market in silver out here? Let me get rid of that trend line. We can see that silver certainly broke through that trend line out here. Well, if you just go back and you take a look at the 30-year Treasury, so let's take a look at a different instrument. Daily time frame out here. Of course, we could take a look at a weekly, but take a look at the 30-year Treasury. Take a look at this consolidation level. That's that larger yellow box on our screen out here. We could pull that off to the side as well. Take a look at each time up, each visit up in the 30-year bonds, how that is acted as a area of resistance, as strong resistance out here. And that's what we want to see take place in the case of silver. Obviously, we're flipping that chart around, and that would tell us that maybe silver is where we get the message in the markets that the move lower could be over. So silver here trying to get back into the breakout session. That was the breakout of the consolidation area, and that's at about the $20.44 range. So far you've traded down, or silver's traded down to $20.52 out there. Let's go take a look at what else can we look at? Let me see here what is popping in the marketplace or dropping. So you got Priceline is off a bit. Google's off a bit here. They're the two leaders. You got Priceline down $9. That's 0.7%. You've got Google off $7. Oh, it was the housing stocks that were starting to take off this morning. So we want to go take a look at some of those housing stocks. So let's do that. Let's go take a look at Lennar, D.R. Horton. I don't see them on my screen here, so were they just simply, let me see if any of them are out on my screen. KBH, KB Homes, that's up 8% here this morning. So let's go take a look at that, see what it is doing here. Give me a moment to close this out. KBH is the ticker symbol. They were out with the numbers before the bell. This thing is gapped up. Let's go see what it is going to try to trade into. Let's just clean up the chart. Let's start with a nice, new, clean chart out here. So this thing here, wow. Okay, so that's it. How about this for a nice bullish pattern? So KBH Homes this morning, KBH is the ticker symbol, formed an island reversal pattern. Let me just refresh the chart. Make sure I've got all of the active data out here. Now, it's not one of those island reversals that comes at the very bottom or the very top out here, but nonetheless, this is an island reversal. If you take a look at this, KBH had gapped down on March the 10th. 7 million shares to the downside. That means the prior session, the actual low on this was 1851. So 1851 was the low. That was on March the 7th. The very next session out here on March the 10th. The actual high gets to 1834. So you have a gap in price. What does it do? It trades lower out here. It trades into a area of support, which was formed by this little breakout. Well, that's interesting. So let's take a look at let's take a look at this here as we put this off to the side. So we're going to come back to a little bit earlier time frame. We're going to come back to the sign of strength. This is where gaps are your friends out here. This is where I differ with regard to gaps getting filled, because gaps that get tested that hold as either support or resistance, those things can stay there for quite some time. And that's where I want the gap to actually be your friend. So if we take a look at this, you have a breakout session. This is on December 23rd. Breaks out with 9.6 million shares. It comes back and it tests that gap, and it holds with 7.9 million shares on January 27th. What it has done here for the past 5 days, looks like 5 trading sessions or so, March 12th, only 4.5 million shares. Remember, it's going against a breakout of 9.6 million shares. Gets tested with 5.8, with 4.1, with 2 days ago 4.9, and yesterday with 6 million shares. Not enough to break it down. That thing has been tested a number of times. Now this thing has gapped up, creating this little island out here. So here's your island. I'll go ahead and I'll kind of color that in with a little box out here. That qualifies as a island reversal pattern inside of KBH. So this was bullish here, and then it came back to its breakout area. It's up with volume, gapping up with volume here this morning. So this thing is up with 7.3 million shares. Now this has some resistance, so let's be fair about this, just like on the bottom. So here's your little consolidation area. So just like we took a look at the gap on the bottom, there's a gap up here at the top. Let's go ahead and let's make that a black line going across our screen out here. KBH also broke down back in June of 2013 when it gapped down with 8 million shares, 7.99 to be exact. The session prior to that, which was on June 19th, the low was $21.15. The high of the next session was at $20.73. Now, that level got tested a few days later, which was on June 27th, but it was tested with 11 million shares. 11 million shares couldn't even bust it up. It should have been able to, because it only gapped down on 7.9. Trades lower. The last time up here was with only 4.7 million shares. So what we can see here is a nice little consolidation that KBH is traveling into. So KBH is going to try and bust out that resistance level. Now, from a bullish standpoint, because that has been tested as well to the upside, if it can break above that, meaning $20.78, and really what you want to see it actually do is close the gap. That means you want to see it close above $21.15. Then that area becomes a support level that is on KBH. But what it's done here, it tells you this bottom, this is a very strong bottom, a very strong support level inside of KBH out there. So pretty darn nice looking stock chart out there. Let's go take a look at a couple others. I think is it DHI, is it DHI or DRI? Is one of them is, let me just type it in on a different screen out here, because one of them is DHI, because I think DRI is the food company, right? Darden Restaurants. So DHI is the ticker symbol. Let's go see what it is doing out here. It also gapped up, did not create a island out here. Let's go take a look at the stock chart. Looks even nicer than KBH Homes does. So this morning here, this is gapped up on about 2.5 million shares. This thing has a nice high volume high most recently. So that price looks, has that been tested here today? The low of that session, no, it has not. That's the February 26th candle. It's got 14 million shares, the low of which is 23.82. So far, the intra-session high here has been 23.69. So you know what this is suggesting to me is if the markets take off from here. So let's just take a look at it like this. If just take a look at these two stocks out here, we're looking at, and I don't know if these are even the strongest with inside the housing sector, but if we take a look at D.R. Horton, DHI, and KBH, the ones we've taken a look at here, and didn't mean to do that, in the last 5 minutes or so. If the market, and right now, to me, the markets are pointing that they want higher price. They want bullishness. So unless Janet Yellen just totally blows it today, and delivers some other kind of a horrible message, and this market continues to take off, these are two stocks that you might want to come back and take a look at here. Looks like they're suggesting that the retracements inside the housing market, perhaps it is over with. We'll take a look at Toll Brothers. I don't know why I lost that screen out there. That's never a good sign. 877-927-6648. Really flat market out here. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Boy, looks like while we were exploring for treasure out there, when we took a look at that DR Horton DHI, the ticker symbol, and then what else did we look at? One of the others out there. I went ahead. Now, what's on the screen here right now is the iShares U.S. Home Construction ETF. It's trading out at about 25.41 right now. Now it's the monthly chart that I've got up on my screen. So if we take a look at coming off of the lows back here, this is October. So this thing forms a Rhodes momentum indicator signal here. September 2011, the month of September 2011. One of those little lower threshold signals. Now this one here is marked with a U. You like to see that because it tells you that these lower signals, where you've got in essence sellers that are in control, that we really have established here as an uptrend, because they weren't able to push it lower than the previous time that they were able to push price down there. So it already shows you that you've got the beginning of a uptrend here that has been established. You get the actual true buy signal on this that takes place the month of October in 2011. You really get into a confirmed buy mode right here in December of 2011. And ever since that time frame on the monthly chart, take a look at these nice red RMI signals out here, even last month as well. Even as the low on fuel light, that price relative strength divergent pattern popped on our screen. Again, it's nothing more than low on fuel. That does not mean to close out a trade or anything. That's on the daily. On the weekly chart out here, as we take a look at the weekly chart, this thing also nothing but the red indicator signals out here. It's telling you that buyers are in control of this equity. So the weekly is looking strong, the monthly looking extremely strong. And now we come down and we take a look at the daily chart. And we like about the daily chart that we see here right now is that we have formed, or it has formed, I should say, it has formed a lower threshold signal, RMI signal here. It did it on March the 14th. And what we saw here now happen today is we went into a not just a buy signal, but a confirmed signal buy mode, the entire thing here as we are speaking right now. Now, the trading session for today is not over, so we want to wait to see how this ends here. But it looks like as long as we get a close above 25.23, you're at 25.41 right now, we'll have a confirmed buy mode inside of the ITB out there. And that means that doesn't mean you go buy necessarily the ITB and take a look around at the different holdings, the weighting structures within inside there. There are, I don't remember how many stocks make up the ITB, but you can easily find that out. So many sources out there to grab that information from. So that's what's going on. With regard to the markets out here right now, if we take a look at the things to be focused on, you've got the New York Stock Exchange. Maybe I didn't mention that earlier yesterday when we were talking about it. The bulls absolutely took control of the New York Stock Exchange. They were able to go ahead and turn that price oscillator above the zero line. That is right here. that is breakout territory. That is bullish out here. Only, and I mean only, if you were able to see a net decline in issues today of 535, I believe is the number, or greater, would the bears actually have taken control. And that would be very bearish after getting back above that oscillator here yesterday. So at this stage, the message of the markets, of the wider swath of the market, the New York Stock Exchange, and every other index out there, all of their price oscillators have turned up. That is in bullish mode out there, and it looks like we've got another breakout that is being attempted. It's more than being attempted out here. The VIX index, it's below the 50-day exponential moving average, so as long as that stays below that level, which is, by the way, right now 1485, you're trading at 1432, that too says all kinds of liquidity. That leaves one last element, and that is going to be what's going on inside the euro, Japanese yen. And at this stage here, it's not really giving us any signals, kind of a neutral party out here. So the ball goes to the Bulls here. Folks, stay tuned. Our man Basil Chapman is up next. It is Wonderful Wednesday. It means we might have Basil for 2 hours. And Daryl Martin, David White, the Tom O'Brien Show from 4 to 6. Have a wonderful Wednesday. I look forward to seeing you tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.